Hi folks, welcome to this video on the problem called ZCom. And in this question, we're given the equity section of the balance sheet for ZCom at the end of 2014 as well as at the end of 2015. You'll see in the question that they also give us some information on the declaration of dividends on the common shares throughout 2015. The question asks us to determine what our net income was for 2015. So given this information here in the equity section, you can see we started with common share equity of $420,000. That's the amount of money common shareholders gave us when we issued 140,000 shares from the date we began business to the end of 2014. Similarly, we see that by the time we got to the end of 2015, we had common share equity of $480,000 given to us from the shareholders who hold 160,000 shares. We also had retained earnings at the end of 2014 of $80,000, but now at the end of 2015, $93,500. There were things that happened during the year that made retained earnings change. They told us that throughout 2015, twice in February, once in April, and again in June, there was a 40-cent per share cash dividend on the outstanding common shares. In addition to the dividends paid on the shares, there was also on April 4th $20,000 or 20,000 new common shares issued. So now what we need to do is take the equity sections of the balance sheets as we see them, together with the cash dividend information, as well as the fact that new shares were issued, and figure out whether ZCom had a profit or a loss in 2015. So let's begin our analysis. The first thing when we talk about profit and loss is we think profit and loss can be determined if we look at what happened in retained earnings, because we know what changed. We know it went from $80,000 at the end of 2014 to $93,500 at the end of 2015. So maybe if we analyzed that account, we can determine whether or not we had income or loss for 2015 and calculate that amount. So let's begin. So in the solution, we can start with retained earnings at the beginning of 2015, i.e. the end of 2014, add in our net income, or whatever the loss might be, deduct any dividends that we declared during the year to come up with the ending balance and retained earnings, which we already know to be $93,500. Since we have information on dividends declared during 2015, I have in brackets here that we should find this first. So let's begin. What was declared in dividends in 2015? Well, we know from the question, if you have a look, that on February the 15th, we declared a 40-cent per share cash dividend. But don't forget, on February 11th of 2015, we still had the same amount of shares, 140,000 at the end of 2014, issued and outstanding. In other words, from December 31st, 2014, up until February 11th, 2015, there were no new shares issued. So the 40-cent per share cash dividend declared on February 11th was only on the 140,000 shares that we have here, right? So now we know that in our solution, the dividends that were, or the shares that were, cash dividends that were declared on 140,000 shares at 40 cents a share was 56,000. Similarly, in February 28th, because we saw in the question, we also declared a cash dividend on February 28th. Well, again, no new shares were issued between February 11th and February 28th. We still only had the same 140,000 common shares that were issued and outstanding at the end of 2014. Those shares are going to get a 40-cent per share dividend again, and so it's 56,000 again. On April the 6th, notice the situation changes. So in other words, we're now declaring a 40-cent per share common share dividend on 160,000 shares, not 140. Why is that? Well, if we go back to the question, we see here that on April the 4th of 2015, 20,000 additional shares were issued. So, by the time we get to April the 6th, we're going to have to, when we declare a dividend on April the 6th, remember that in addition to the original 140,000 shares that we've been declaring a dividend on, we're also going to declare a dividend on these additional 20,000 shares. So now our dividend at 40 cents a share is being declared on 160,000 common shares. And that's going to give us a $64,000 cash dividend. On June the 9th, those same 160,000 shares that we're declaring a dividend on is at 40 cents a share, so again 64,000. So now if we total 56,000 twice on February 11th and February 28th, and add in the common share dividend, cash dividend that was declared on April the 6th and June the 9th, we're going to have total dividends declared in 2015 of $240,000. So how does this affect retained earnings? Well, you remember from your prerequisite course that dividends declared will reduce retained earnings, because when we close the cash dividends account, we reduce retained earnings. Don't forget, our cash dividends are dividends declared. Same thing. So to close the cash dividends, we know our cash dividends or dividends declared account has a normal balance of debit. So we close it by crediting it, and we close it to retained earnings. So we can see here this is going to reduce retained earnings. So therefore, dividends declared is going to reduce retained earnings by what we calculated, which is $240,000. So I'm just going to move that into position here. Maybe went a bit too far. So now I've got dividends declared being deducted from the opening balance of retained earnings. However, this is not going to give us an ending retained earnings balance of $93,500. We have to figure out here what was our net income or loss, such that when we add it to our opening retained earnings and deduct dividends declared, we'd have retained earnings at the end of $93,500. So now we have to calculate what that number is. So if we have to find our net income or loss, we should be able to see at this point that it's income. We have to have a number that's bigger than the dividends that we declared added to 80,000 in order to get 93,500. So if you looked at this mathematically, what would we have? 80,000 in retained earnings plus whatever our net income is minus 240,000 is going to give us our ending balance of 93,500 in retained earnings. So what would X be? If we solved for X, that would be what? 253,500. So that is the value of our profit. So if we added 253,500 in income or profit to our opening balance of retained earnings, which is 80,000, and then deducted the dividends that we calculated that were declared during the year, we would get 93,500. So the answer or the solution here would be 253,500, and that would be net income, or what we would call profit. And that's the answer to our question. Now, some students, when they do this question, prefer to use a very straightforward math formula, or what they know from their prerequisite course to be their mini statement of retained earnings. The other way you could do it, not all students like it this way, but you could do a T account. And you could say, well, I started with retained earnings at the end of 2014 of 80,000. We see this in our question right here, right? at the end of 2014, and we know that at the end, we wound up at the end of 2015, we ended up with retained earnings of $93,500. So what happened during 2015? Well, one thing we know is that we declared cash dividends, which we just said here in the closing process reduces retained earnings. So we would have to figure out here what number we added to retained earnings, opening balance, X. So what amount of income did we add to the opening balance of retained earnings when we closed out our income summary account, such that when we deduct $240,000, we wind up with $93,500. Some people would just solve this using a T account to get $253,500. This is just an alternate way for you to do it. You don't have to do it this way. You can use your statement of retained earnings that you learned in your prerequisite course, or you can use your math formula. Opening retained earnings plus income less cash dividends would give us $93,500 ending retained earnings. And you could solve one equation, one unknown, to see that you're going to have profit or net income of $253,500. So this concludes our video on finding net income when you have the comparative equity section of a balance sheet.